We'll be talking about capital market development now. Tola Odukoya, Managing Director, Don Merrifield Asset Management and Research, joins me on the program. Good morning to you, Tola. Thank you for coming in. You listened to the report, and of course, you followed the 2 days of the forum in Abuja, and a lot has been said about developing the capital market. What's your own assessment of all the conversations?
Well, we've been at this for quite some time as a country and as a sector. But obviously now we should actually look at taking action. It's good to talk, it's good to engage the legislature and so on and so forth. However, let's start acting. At least we have the Capital Market Master Plan, a 10-year plan in place. And there are some interesting objectives to be achieved in there. Mr. Jallo Waziri, we heard him earlier, the ED at the Nigerian Stock Exchange, made a valid point. The disconnect between policy formulation in Nigeria and the capital market. Now, I'll give you a good example in the merchant banking space, as it were. If you look at the typical regulation of a merchant bank today in Nigeria, as put together by the central bank, a good percentage of the activities therein belongs to capital market operators, i.e. what you call investment banking. For example, issuing house activities, investment management, investment advisory, and so on and so forth. Now, those are activities that should actually be carried out within the investment banking space in Nigeria. Well, because you need to have CBN regular approval to call yourself a bank, in quote, we would normally refer to them as issuing houses in Nigeria. So now part of the problem even within the capital market is that beyond the fact that you have so many players, right, they are not that strong in terms of capital. And as a result, over time, we've seen an economy where we have what you call a bank-based economy, where most of the financing for projects and so on and so forth have gone to the banks. Now, it's not like there's nothing wrong with that. However, if we're talking about developing the capital market, where you now have those two pillars in the financial system, i.e. the commercial banking space, and then the investment banking space, or what you refer to as capital market, with other operators in that sector, obviously. You now need to concentrate on that sector, back it up with legislation, back it up with policies and action. So, for example, what am I talking about? I'm talking about a situation where, remember once upon a time in this country, not too long ago, we had 89 banks. Now we have just about 13 listed and a handful of others that are not listed. Now, how can we now strengthen the players within the capital market space such that, for example, you want to construct the fourth mainland bridge. You have maybe one or two strong asset managers. For example, like you have the PIMCOs in the US, the Aberdeen Asset Management in Scotland, right? These are big asset managers. Or, for example, you have a Goldman Sachs. Goldman Sachs, traditionally, is an investment bank, or what you call an issuing house, or a stockbroker. And I need to make a slight detour here. More often than not, because of the way the market has evolved, when we talk about the capital markets, people concentrate only on stockbroking and the equities market. It's a lot wider than that, and it should be, rightly so. So those are the things we need to pay attention to and address: transparency within the market, governance within the market, because when you have those things, accountability within that space, so that when you have those things in place, then you are even able to attract a wider range of investors.
So you talked about the banking sector. A couple of years ago, we had 89 banks, and then the recapitalization saw a further pruning down, some mergers, some acquisitions. And very recently, I know the Securities and Exchange Commission actually, did something like that, increase the capitalization base for operators in such a way that you could have a stronger capacity to operate in the market.
Yeah.
So is it that wasn't enough? Do we need to have another recapitalization again?
Well, let me put it this way. What the SEC is trying to do is fine. However, we will all agree that these are difficult times. When the banking sector recapitalization occurred, many banks were already operating at, certain levels of transparency, accountability, governance, and so on. So you saw money not naturally gravitate towards those institutions. Yes. Now, in my view, there's nothing wrong, for example, with having a situation where you allow capital market operators here now we're talking about brokerage firms or investment banks, as it were, have access to liquidity. Because remember, as at the time banks were recapitalized, we only had the equity market primarily. Any other thing, treasury bills and the rest, were short-term in nature. And so naturally a lot of funds went in there. Now, what's wrong with putting together, as part of the master plan, right, a situation where capital market operators have access to some form of liquidity? Now, the operators and the regulators and the legislators can equally sit down and talk about this, obviously with the other supervisory bodies, for example, the Ministry of Finance, the Central Bank, and so on and so forth.
That is to come up with an act?
Well, that's if it doesn't exist already.
Okay.
We're now talking about policies. So for example, if I'm a dealer, right, what stops me from, for example, you know, the stock exchange already has market makers, right? But then where's the liquidity for me as a market maker to access the market and thereby create increase in activities and turnover in the equity market? Because yes, equities are tanking, but however, I tell you that so far this year, some stocks have done 30% up. Yes, the NSE is down 4% on the year, but some stocks have done up to 30%, which means, for example, if you had put $1 billion in that particular stock, you've already made 300 million profit as we speak, although notional. So what's wrong with allowing operators within that space, capital market space here, have access to liquidity such that by the time they ramp up activities, they ramp up liquidity, they have good numbers to show, then they can begin to attract investors? Because remember, the equity market, as it were, has not really recovered, especially the players, from 2008 effectively. And it's simply because a lot of the operators in that sector, the capital has been impaired by losses incurred, and compared to their, let me say, brothers at the other side of the pond, the banks, who have access to liquidity, they do not. So why don't we concentrate on strengthening the operators? Once you strengthen the operators, naturally funds will flow through that. So for example, if you want to finance a power plant, yes, you have your commercial banks there playing, but like I said earlier, there's nothing wrong with having an investment bank there playing a role in terms of underwriting. There's nothing wrong with an asset manager there playing a role. There's nothing wrong with a pension fund, who in a way is also a fund manager, playing a role. But what we see these days is just key dominance by commercial banks. And we're not saying anything is wrong with that, but if we are really talking about developing the capital market such that it can now stimulate economic growth, rightly so too, we need to first look at strengthening the operators within that sector.
We got this tweet from one of our viewers at IPEM, says competition law should be in place to address any perceived bank or capital market divide. We have a history of banks playing heavily in the capital market and eclipsing the traditional players in that segment.
Well, I think he's actually buttressing what I said earlier, that in the equities market, it's down. But if you look at the fixed income market, for example, where the banks actually, for example, FMDQ, banks play a big role there. And like I said earlier, there's nothing wrong with having capital market operators also playing within that space. You know, and that's how it's done in many major markets across the world, where you have investment banks actually being the ones that are most active in the securities market, as it were, not commercial banks. But unfortunately for us, we are running more what we refer to as a bank-based economy. Like I said, there's nothing wrong with that. However, if we are now saying we want to make the capital market as strong as the commercial banking space, we now equally need to look at the operators. Why are banks crowding out the capital market operators? It's simply because they have the capital, they have the liquidity to play within that space. And as a result, they will typically dominate any market, any space.
So do we still need any further legislature? Do we still need any further laws to be put in place to actually balance this seemingly imbalance? Well,
yes and no. There are some laws that need to be changed, for example, bankruptcy laws and the rest of them. For example, we know that the growth of mortgage in Nigeria, because you can actually trade mortgage securities also, we've had some hiccups or challenges, as it were, with respect to the Land Use Act. And, you know, for years, it's been said that that needs to be reviewed for mortgage to really kick off. So yes, we need to review some acts. We need to, but the key thing is, I keep saying that action, because some of these things already exist. But then, how do we now follow through with respect to accountability, transparency, governance,
corporate governance, yes,
within the capital market space?
So what's next for the market? What do you think? Because this is June already, so half of the year is gone.
Well, for me, I'm an incurable optimist in the Nigerian story, because I keep saying it, the numbers tell it all. You have a country of 170 million odd people, a median age of 19, 20, about 55% of contributors to your pension funds are within the ages of 22 and 45. It's a young population, it's a growing population. You have so many opportunities within the respective states within the country. Let's ask ourselves one question. On a daily basis, I see an increasing number of Chinese people in Nigeria, on Nigerian streets. Why are they here? On a daily basis, I see an increasing number of South African companies trying to forage into
and
the
we
space.
have an increasing number of Nigerians exiting as well. If you go to the airport, you see a lot of that.
What are the Chinese and the Indians and the Lebanese and the South Africans seeing that we are not seeing? So we need to sit down and really look at ourselves and tell ourselves the truth, right? You know, why would a man come all the way from Beijing and be selling in the Dumota market, and he's making his money, and I'm leaving my country? He's saying something. Why can't I see that? So the opportunities are there. The opportunities are very much there. We just need to put our acts together, and then without any doubt, I think the sky is the limit.
Tola, thank you so much for coming on the program this morning and sharing your perspectives with us.
Thank you.